Now we're going to switch gears a little bit. We'll catch up with them on the trading floor a little bit later on in the show, but we're going to talk about Q2 earnings. Gap reports its Q2 earnings next week, and joining us to talk more about and give us more insight into the retail space is David Swartz. He is the Senior Equity Analyst at Morningstar. Good morning.
Good morning.
It's great to have you on the show today. So, let's just dive into this topic. Gap has been a household name in the retail and fashion industry for decades. Meanwhile, Old Navy is the brand bringing in the most revenue according to the company's latest quarterly figures. So, what are investors watching more closely when it comes to Gap Incorporated?
Old Navy is certainly the key when it comes to Gap. Old Navy, as you said, generates more than half of Gap's revenue, and I'm sure it generates something like 80% of Gap's operating income. So it's the brand that really drives the stock and drives the company. Of course, Gap's three other brands are also important, especially Athleta. Although it is the smallest of Gap's four brands, it is the one that has probably the most growth potential and is potentially its most profitable brand in terms of margins. Gap really wants to continue the momentum that it's seen in the last couple of quarters. In the last quarter, Gap had positive same-store sales growth at all four of its concepts, which is something that hadn't happened in many years.
And speaking of earnings, Gap reports its Q2 figures a week from today. So what are your expectations? What questions are you hoping the company will answer?
My expectations are that Gap has about 3% growth, and my EPS estimate is 38 cents. I think we want to see Gap generate positive same-store sales growth, especially at Old Navy. Old Navy is up against a very easy comparison with last year. It had a negative 6% comp in the second quarter last year. So I think that Old Navy should post a very strong quarter. Old Navy does benefit from the low cost of its products. It does seem to work right now with the way that the apparel market is going, with a lot of stronger growth from apparel makers and retailers that sell lower priced items rather than department stores, for example. I think we want to hear more about Gap's efficiency efforts to cut costs as well as to drive sales growth.
In your latest report on Gap, you indicated a very high level of uncertainty when it comes to the Gap stock. Why is that?
Gap has had a lot of problems. This is a company that really has struggled for most of the past 20 years. That's just the reality. It certainly has looked a lot brighter in the last couple quarters. The CEO change last year, there was a long period where Gap didn't even have a permanent CEO. So the bringing in Mr. Dixon last year as CEO, I think seems to have stabilized the business, but the reality is that this is a company that's been troubled. This is a company that has struggled. Its main concepts in the past were Gap and Banana Republic, and both of them now are really in decline and closing stores. So this is not a company that is entirely healthy.
Now, I just want to point out to our viewers right now that we're getting images of Lynn Martin and the executive team and, team members of Gap Incorporated headed to underneath the Bell Podium, where they're going to sign the Distinguished Guest Book right before ringing the opening bell. But, another question, when it comes to new campaigns or initiatives, what are analysts and investors looking out for from Gap and its product offerings?
Gap needs to upgrade its styles, and it has been doing that. It brought in Zach Posen, who's a well-known fashion designer, to help out with that, and he's now involved in design at the whole company, and especially at Old Navy. Gap does need to upgrade. It has at times fallen behind. It can't just sell the same products year after year and expect people to buy them, because the fashion industry and the apparel industry is just too competitive, and it moves too quickly. And styles change these days faster than ever due to the influence of social media, for example. Gap is also working on its marketing. It has been running new TV commercials in the last few months, and it is trying to go back to maybe some of the kind of vibrant, upbeat marketing that really drove the business in its heyday back in the 90s.
And last week, we learned that retail sales jumped by 1% in July, considerably higher than the 0.3% Dow Jones estimated. So what does this say about the health of consumers?
Generally, consumers are still spending. The unemployment rate is still low. Inflation is declining. That's certainly helping. Like gas prices, for example, are down. Apparel spending is kind of uneven right now. We have seen some good reports and some not so good reports. Macy's, for example, reported yesterday, and the quarter itself was pretty good, but the outlook was kind of dim. So it is kind of a difficult market out there right now for apparel retailers, but it could be worse. Right now, it's somewhere in the middle between good and bad.
Well, thank you so much, David, for all of that insight and joining us on the show this morning.
Thank you.